Good afternoon, everyone. This is Brian Overby, the Senior Options Strategist at Options Play. Welcome to Morning Market Overview and Ideas. Before we get too far along, I have to let you know that if you're going to trade options, you should read the characteristics and risks of standardized options. It's available throughout the Firstrade platform. And we're going to be looking at actual securities. Are not meant to be a recommendation. Past performance is not a guarantee of future results. So this is from last week, and I've put together a little summary of the piece that Tony Zhang, the chief strategist at Options Play, puts together every Monday morning. Goes out in the inboxes of all of the members at Options Play. And the first half of this page is the market summary of what Tony talks about, and then I put a little summary together of what happened overnight. But the major indexes last week ended lower, but market breadth improved, and that's the big theme today, I would say, is market breadth. Market breadth is holding strong while we're seeing some of the AI sell off and stocks like Nvidia, AMD, Micron. Micron has been extremely volatile since their earnings report, Intel, Marvell. So last week we had kind of a rotation out of the AI into many different sectors of the marketplace, and we'll talk about those sectors here in just a second. Inflation remains elevated, but the bond market stayed calm. So the bonds are going up, which brings yields down a smidge in this elevated inflationary environment. But the fact that the Fed has came out and hinted that if anything that happens at this point in time, it'll probably be a raise in interest rates as we head into the end of the year. I think that has tamed some of the bond market's concerns. And because of that, we're actually seeing yields going lower. Now, on Monday, because of the U.S. and Iran tensions, the S&P 500 index actually set a record high, but it gained 1.1%. NASDAQ jumped 2%. Dow rose 59%, but Alphabet was a big part of that. Alphabet surged because it's now a new component in the Dow, and that really is what set the Dow higher. Markets were supported by easing geopolitical tensions. We're seeing that. We're hearing that is happening, but it's still not quite as, well received as what everybody has been implying. So we are seeing ships getting through, and we are seeing that in the oil prices overall. AeroVironment surged 19% after a stronger than expected earnings report. So up 19%. That was one of the big movers in the marketplace this week. And investors are going to be turning their attention to jobs. The JOLTS report's going to be coming out. The Chicago PMI, consumer confidence this week. Also important to note that markets will be closed this Friday for the 4th of July holiday. The bond market closes on Thursday about 2 o'clock. And then the stock markets all across the board will not trade on Friday. They don't close early on Thursday, but they do not trade on Friday. All right, so now if you have any questions along the way, please do open up your Q&A box. I'm happy to try to address them. But to start with, this is the biggest thing, and this is what is mentioned in some of the notes, is that we hit a record high on outperformance versus underperformance, 82%. And that's going to be very apparent when we start going into the research and looking at the different outperformers and the money flow. But 82% is, ever since we've been doing this report at Options Play, this is the record high number. And it's not being led by just the AI stocks. So this number, when the AI stocks were leading the way, it was about 40%, to give you some perspective. Now it's at about 82%. So very strong risk on report. Some of the, one of the more, I think, strongest signals that we've had as far as risk on is concerned. And we're seeing it happen because we're seeing healthcare go up. Also, we're seeing bonds go up, which brings yields down. Other areas that have done well are utilities, staples, and defensives. So we've seen not only in the healthcare sector, not only in the banking sector, we're actually seeing the travel sector do fairly well. And last week, the trade of the week, if you will, I'm not quite sure if that's the name that I'm going to call it, but we usually try to come up with at least one trade at the end of the event today, and that was in DHI. And so the home builders have had a real strong week, a little bit based off of some legislation that came out of Washington, and I don't think it's actually been approved at this point in time, but it is sitting on the president's desk ready for him to sign. Everybody's kind of leaning that he's going to go that way, but at this point in time, that has we saw money flowing in to that sector, and that was one of the stronger sectors last week. Home builders, which, in this environment was a little bit surprising. So where are we leaning to this week? So healthcare confirmed at an ETF level, at the ETF level. XLV, the healthcare ETF. Also in single stocks, we see Amgen doing well. Merck, which is one of the Johnson & Johnson, and Merck also had a strong week. And then what else is one of them in here that I wanted to highlight? HCA, Glasgow also paired with the broader defensive equity wave. The bond market was flat. We're still seeing high rates overall, but the fact that it's been well received in this inflationary environment, the bond market isn't necessarily leaning as bearish as it has been over the last month or so as we head into this next earnings season, this next bout of earnings just in general. Here are other stocks that we're leaning into. The consumers, the financials are still doing strong. As long as you stay away from the private equity. Private equity is kind of hurting a little bit. Stocks that have struggled, Broadcom, NVIDIA, Qualcomm, well, Google actually had a real boost, but it is down from its highs. Google is, or Alphabet, we should say. But obviously, going into the Dow gave it a big boost yesterday, up about 5%. Growing weakness. Where else were we at? Materials and mining. So I do find this to be a little bit interesting. I guess you could say, if bonds are coming down and we're seeing the dollar strong, we are seeing some of the materials and mining stocks show a little bit of weakness. And I still think that gold is a solid play and a solid hedge in your account. You could also look at silver, even copper. Copper is off of its highs too. Now, copper doesn't have, like gold and silver have very strong ETFs that have fairly low fees and do a really good job of tracking the prices. SLV and GLD are the two ETFs that are the most popular in the space. CPER is a copper ETF that's based off of the futures. It does fairly well, but it's got fairly high management fees, because whenever you're dealing with futures, you have a lot of fees to roll, bid-ask spreads that you have to deal with. And CPER, it's not mentioned in here, but that is when we're building all of these data centers, to see copper be down a little bit at this point in time, to me is also something that if you're sticking in this area, let me put it this way: the flows are out of it. They're driving these stocks lower, and because of that, it might be a potential hedge in your account. And these are some of the underlyings that you could trade to get away from all just equity accounts. So even though they're down, I think that there are some opportunities in the mineral space. And if you want to be a little bit more speculative, you can look in some of the mining. Newport Newport Mining and has always been a decent valued stock in that space. Where's the money flowing? Here we have it. Right now, the money is flowing.
Yeah, I caught that part about CPER. Brian's right that it's a futures-based ETF.
Oh my gosh, my phone is Siri's listening, I guess. Where is the money flowing? The record bullish share right now in this area. This is the numbers, and this is where it's coming from. 164 bullish stocks. That's where the 82% record is coming from. So the most bullish risk-on signal that we have had. The bonds are coming down. Interest rates are coming down. Bonds are going up. Utilities, staples. We're seeing even airline stocks. Delta Airlines has been doing really well, and it kind of goes hand in hand with the fact that oil and gas prices are down. Right now, today, we're seeing oil trade at $72 a barrel. We actually have the Dow futures down just a smidge, and the rest of the marketplace is also up or down just a few ticks at this point in time. Seeing the VIX index trading right around 17. So the consumer staples, the fact that we're seeing some money flow into this area. Financials have been doing well for about the last 3 weeks or so. So still some opportunities in those levels. There's still some good valuations in the financial space. And then where are we seeing the weakness as far as money flow is concerned? Energy. And I guess that kind of makes sense. We had a big spike up once the conflict in Iran first started, so maybe we're seeing a little bit of a sell-off in that area, mainly because oil is going down. Still strong fundamentals, but seeing just a little bit of sell-off, a little bit of a profit taking in that area. Big tech right now, as mentioned earlier, NVIDIA, Broadcom, Qualcomm. Those are 3 stocks that are kind of in a holding pattern. And then asset managers, I would put this more so in the private equity space. Just a lot of grab for cash, and people are a little bit nervous as to, will these companies that are generating all this capital be able to pay? And will the profits come? If they build it, will they come? And so you're seeing a little bit of weakness in that area in general. APO, Ares, BlackRock. These are some of the stocks in this area that is showing some weakness. All right. And it's kind of odd in that it's counterintuitive. They have too much business, so it's creating concerns. And because of that, they're showing some weakness as far as money flows in that space. Now, here's the leadership. So I'm just going to click real quick to the next slide between here and there. Here is the pressure, and here is the leaders. So once again, to go back to that 82% level, the leadership slide is way bigger than the pressure slide. So confirmed areas of strength. Like we said, for the last month or so, banks have been doing really well. Here's some of the financials. Healthcare is doing solid. Consumer staples, which is good to see. Consumer staples are doing fine. Travel that's highlighted inside this confirmed leaders group. And then the early breakout are the ones that Tony likes to highlight a lot. In other words, we know that these areas are doing well. And you can kind of jump on the bandwagon, and you got a team that's going to the championship. All of a sudden, you have a lot of fans that want to follow it, and that's where this is at. The early breakout are the underdogs that you see in the marketplace, the most potential for the upside. And here are some of the stocks that are highlighted in that breakout section, and a lot of these stocks actually show up in the top picks of the week. And one of the stocks, and I do want to bring this one up, I think it's showing up in, Starbucks. Starbucks is interesting because it's been in a very long bottoming pattern. And we actually saw a breakout in Starbucks. New management, they got out of China. They no longer are doing any business over there. There's a lot of competition, and they were battling and losing that battle. Uber also is. So these are, I think, in the area that you would say is some of the weakest area in a weak economy, we're seeing some breakouts in Chipotle. We're seeing it in Lowe's. We're seeing it in Starbucks. We're seeing it in Uber. So these are some of the stocks that are kind of surprising in the breakout area, where we're seeing Nvidia struggle. We're seeing Uber actually make a pop to the upside. So still strong fundamentals in Uber, relative in the space. So let's go and take a look at some of the weakness. Here's some of the confirmed laggards in the marketplace, and a lot of it has to do with energy. Energy stocks are really leading the way in this space. Some building weakness, and we see, Google once again popped again on Monday because of this entry into the Dow. Broadcom, Nvidia, more of the same themes over in the tech space. KKR, which is, and this is BlackRock, BLK, the asset managers that we mentioned. So that just kind of more of the same theme. So here are the top ideas to watch. I always like trading Visa. Visa is an expensive underlying, and as far as options are concerned, has really good markets. And so this is one of the early breakout stocks that had been beaten up for quite, it wasn't getting the respect that it deserved. And at this point in time, we're finally seeing the stock end up coming back into favor. These are the two stocks that I mentioned, Starbucks and Uber, that were in the early breakout section. We'll take a quick peek at Starbucks. I want to see actually how it did yesterday. I actually didn't take a peek at it at all. I wonder if that breakout continued in Starbucks. And Chipotle right here in the restaurant area, one of the stocks looking strong in how would I say this, in a fairly, if you're worried about inflation, you're worried about the economy, to see the restaurant companies doing fairly well, Chipotle is one of those stocks that is the benefit of that. And then here's as far as the ideas to watch, here is Abbott Labs in the healthcare sector. American Waterworks is solid, but I'm not quite sure of the liquidity in this underlying. It's a utility stock, so that makes, I don't mind that stock, but it makes it a little bit tough to try to play options on it. So let's go and we're going to take a peek at Starbucks. I don't think of it as a bad trade in that I don't know how bullish I want to get on Starbucks, but it is making a turn. So the chart is kind of showing that. And then I think we're going to do Altera in the tobacco space, MO. I think we're going to actually end up making that the trade of the week. So if you have any questions, please do put them in the chat box. And if not, let's pop back out here just for a second. And we're going to run over to the Firstrade platform. And let's look at SBUX to start. Pull up the options wizard. All right, so this is a classic cup and handle pattern, and we really want to see this breakout continue right here, but here's a bottoming pattern. So here is the move to the downside. We bumped up against the 200-day moving average, and we just hung out there. This is oh, no, that's not, that looks like Starbucks, though. SBUX. Colgate actually is one of the stocks that was one of the plays of the week. But we had this bottoming pattern, and that's weird how similar those charts are. But here's a bottoming pattern that has broken down for about the last month. It hit a consolidation period on the end. Here's the cup and handle, and here is the breakout right through this level. This completes this entire gap up to here. A lot of resistance right here. We were down, we got a red candle yesterday, so we're down 54 cents on the day. So if we can see the breakout, I think the next level here is 108, where you could feel fairly comfortable at. And then from then on, if we have the potential breakout, then obviously we're going back. We're not even close to new highs. Let's go all the way back to the 6-month period and zoom out. Oops, as far as we can. Yeah, we can. I'll say within a new 52-week high would be if we got up to 108 in this level, but then that's the next area of resistance to the upside. So in Starbucks, decent volatility because of where it's at. If we go into the Firstrade options wizard, powered by Options Play, click on high implied volatility. Last 70, let's modify this a little bit. Going out 38 days, we got earnings in the middle, 29 days away. Selling 104 by 97. We're looking at 165. So 165 in this issue off of 7, that's not going to be divided by 7, especially with the earnings around. We're only at 20% of the width. Let's look at, let's go a little tighter and let's pull this in. Let's make this about 5%, 5 points. There we go. 144, yes. Oh, we got to go 31 here. Okay, there we go. Now we're a little bit better. So we're going 5 points wide, 1.78 broad in on a 5-point wide spread. That's 35%. So that fits the third of the width of the spread rule. And that's one of the things that we talk about a lot. And I don't mind if you're going to do this trade. We're going to be on the earnings report on the 29th. Don't necessarily need to be into the trade by that level, but we're getting a good premium because of it. We also have that protection on the trade. Usually, if you're going to go out 30 days, when we get down to day 20, we're going to take a look at it and see if we want to get out of the trade. But a speculative trade because of earnings, anything that includes earnings. But this is a solid paper trade if you believe in the cup and handle that's gone. Kind of, I guess that's about, the longer the bottoming pattern, the better. But this is definitely a breakout area right here, right at the 103.81 level. And then if we break out above, we can zoom in. Let's go here. And check out this right there. I'd say 104. Let's call it 104. 104, 104.7 is right there. We'll say 104. If we can stay above 104 today, we're at 104.6 right now, and get a green candle, it'd be nice to get above this high. Then we got this potential breakout to the upside. Momentum is still, it's not overbought. Yeah, everything. It's a solid kind of speculative underlying on something that money flows are coming into. You wouldn't necessarily expect. We got a 1 month bullish, 6 months, solid trade. Okay, let's also go in and look at MO. I like Colgate too. Actually did a daily play last week in Colgate. Options wizard. So money flows were coming in, and that was part of the report last week. Let's look at Atira. High implied volatilities. We had a bullish move here, and we had a breakout right there. And this is once again part of the early breakout pattern that we're seeing. 6 months. And there is the breakout right there. So 2 green candles, decent breakout to the upside, little bit of pressure on overbought. So we got how many green candles? 1, 2, 3, 4, 5, 6 green candles. But a solid breakout to the upside, looking to try to set some new near-term highs. 30 days out, so we're running into earnings on everything. So this is 38 days out. Let's look at something that avoids earnings here. We got to go 24 days to do that. But I want to give you a trade that, yeah, that's not bad. 5 points, 132, options play score of 89. Modify this. Trade 132. It's really tight. 5 points. 33, right on the head. Okay, so this is a third of the width of the spread. We're avoiding earnings here. IV rank is at 86. That's mainly because of earnings. That's the IV rank is based off of a 30-day average for volatility, so it's high. But this is solid. If we get this done for the 132, which is exactly a third of the width of the spread, 5 points wide, decent premium, stocks won at 104, going out 24 days on that trade. And we're only doing the 24-day trade to avoid the earnings. You could obviously go a little bit longer. You want to go 45 days? We'll look at that. And I'll leave you there. This is where I would lean in MO. I would lean on the shorter term trade and avoid that earnings. But if you're willing to take the earnings risk, see how much different that changes our trade. Keeping the same strikes, we're not bringing in that much. 139 versus 132. All right. Well, obviously markets aren't open, so that is not a big difference relative. 24 days out. Yeah, I think I like this trade. I like this one. I like the 24-day trade. And I'm going to put that one up inside the account. All right. Any questions that anybody has? I don't see any in the Q&A box. And I'm happy to address any stocks that you'd like to look at. Is there anything else that we showed inside the report? Any other stock that you might want me to take a peek at inside the options wizard? And if not, going once, going twice. I think my Q&A box is working. Still quite a few people out there. Well, that'll be it for this week's edition of Market Ideas. We'll be back next week to do a trade. Don't forget about the markets being closed this Friday, but we'll be back next week with another report and another few ideas as far as option trades are concerned. My name is Brian Overby, Senior Option Strategist at Options Play, and we'll see you next week.